All right, good evening, everyone. Welcome back to our online live sharing classes. Here, we will explore the mysteries of the stock market together and learn how to invest in stocks and master the methods as well as the skills of market analysis. At the same time, we're also striving to earn more profits to ultimately achieve all of our wealth goals. Now, the stock market is full of opportunities and challenges. This goes for beginners and experienced investors. This is a process of continuous learning and growth. Now, learning about the stock investment is a long-term task that's going to require continuous learning and accumulation of information and knowledge. We hope that everyone can find the joy in learning here and make like-minded friends and work together and communicate together. We believe that with everyone's efforts, each person can succeed on the path of stock investment. All right, so let's get officially started with today's lesson. All right, so for the contents we have lined up for this evening, very similar to what we've done previously. Now, aside from continuing to track and analyze the market in real time, as well as the news, there's a couple of very crucial pieces of news that we cannot miss. As we all know, we have now entered the stage where the scale of our asset management is becoming increasingly more important. Only by once again securing the top position in the asset management scale can India have the opportunity to secure the location of the Asia Pacific regional headquarters. Personally, our Indian team and I have always been confident about this. You may ask me why? Because I've been making so many important preparations for the upcoming uprise, boom market, whatever you may want to call it. And as you've all noticed, our high profit trading projects have just started, and it's going to be continuing to be launched more aggressively later on. Now, we are embarking on the fast lane of accelerating for profits. We want all our asset management accounts to be the highest, or else all our votes in the first round wouldn't really count, right? Now, in our previous sharing class, we talked about Jim Rogers, the world-renowned investment guru. So tonight, I want to share with you his 7 major investment secrets that would give us a little bit more insight of how he traded, what did he believe in, things like that, to advance our own knowledge and enhance our own trading strategies ourselves. It's not only important that we know who these guys are, but to learn what they see, what they know. So we need to learn from these grand theory strategies and methods. All right, so we're going to be jumping into macroeconomics. Now, as we all know, for India, the most important thing is about elections. Although the election results have already been announced, the impact brought by the election results is far from over. Now, last time I told you all, as responsible investors, we usually do not have political preferences. We only focus on what kind of profit opportunities we can gain. That is our main focus. Although Prime Minister Modi has been re-elected, the political landscape in India has changed. Now, this will have a certain impact on the country's long-term planning and the formulation and implementation of future national policies. So we're going to continue to keep an eye on this, but other major news information is also something we cannot ignore. All right, so let's go over some of these things today. So first one, Modi set to take oath for the 3rd time on June 9th. So he's going to be sworn in on June 9th as the allies pledge support. So let's take a look at the situation of the general election. Indian Prime Minister Narendra Modi is expected to be sworn in on June 9th for a record-breaking 3rd term. Just 2 days after the embarrassing election results were announced, Modi's political party lost the majority in parliament. But the main ally pledged to continue to support him. Modi is a populist who has been dominating the Indian political sense since coming to power in 2014. He will now need the support of regional allies for the first time, and the loyalty of these allies has been shaky over the years, which could complicate the government's reform agenda. After the federal cabinet meeting recommended the dissolution of parliament, Modi submitted his resignation to President Ramnath Kovind on Wednesday, the first step in many constitutional formalities required before forming a new government. Now, according to local media reports, Modi and his new cabinet are scheduled to be sworn in on Saturday. Now, the NDA, the National Democratic Alliance, won 293 out of 543 seats in the lower house of parliament, exceeding the required 272 seats to form a government. Rating agency Moody's stated that Modi's Bharatiya Janata Party only won 240 seats, which could slow down India's fiscal austerity policy. The weakened majority of Modi's alliance may pose a challenge to more ambitious parts of the government's reform agenda. Now, two regional allies, the TDP and the JDU, are considered pragmatic in economic policy, but Modi's new government may need to find funds to support more welfare projects in their respective states. Although overall policy continuity is expected in the near future, the government will continue to focus on promoting capital expenditure, facilitating business measures, and gradually reconstructing the economy. However, the process is likely to be more turbulent and unpredictable, which will inevitably have an impact on the stock market. This is why we have always emphasized that while the stock market trend tends to perform well in the long term, there's still certain risks in the short term. So that's kind of paints you a picture of how the parliament's sitting, right? Your NDA has more seats than ever before. Meanwhile, the BJP has a little bit less seats. So what happens when a bill wants to get passed? It's going to go through a little bit more resistance. So this is going to affect the reform agenda a little bit, right? Okay, second piece of news. Due to strong economic growth, the Reserve Bank of India is expected to keep interest rates unchanged on Friday. So let's take a look at a piece of this news in regarding to India's monetary policy. So with robust economic growth and uncertain inflation prospects, it is widely expected that the Reserve Bank of India will maintain interest rates stable and retain a tight monetary stance in its policy review on Friday. However, the ruling capacity of the National Democratic Alliance led by the BJP has weakened, raising concerns that pace of increasing welfare spending while slowing down fiscal consolidation may be affected. Now, this situation could pose risk to India's medium to long-term inflation and monetary policy outlook. Some rating agencies have indicated that although the outlook for fiscal consolidation remains intact, the pace of debt reduction may slow down after the election results are announced. Now, in a Reuters survey conducted from May 17th to May 30th, out of 72 economists, all except one expect the Monetary Policy Committee of India to keep the repurchase rate steady at 6.5% by the end of the meeting on June 5th to June 7th. Now, most economists believe that 6.5 rate is the peak of the current monetary cycle. The view of the Reserve Bank of India is based on macroeconomic fundamentals. Given that the inflation rate remains above the target level, it is expected that the Reserve Bank of India will continue to pause on rate hikes. Strong growth conditions provide policy space to continue to focus on inflation. GDP data released last week showed that the country's economy grew at a higher than expected rate of 7.8% in the quarter ending in March. Now pushing the annual economic growth rate in India to 8.2%. So at the moment, it's quite contradictory, right? We got strong economic growth, which provides a long-term stable foundation for the stock market to rise. However, high interest rates are the fundamental reason for monetary tightening, which is unfavorable for incremental capital inflows into the market. With the intertwining of bullish and bearish market fundamentals, the market as a whole may remain volatile, but the heat of the industry sectors and the individual stocks may switch faster. This is also one of the fundamental reasons why there won't be particularly good profit effects in the market in the near and foreseeable future. Therefore, everyone must pay attention to risk control when trading common stocks. And of course, at the current stage, we do not recommend trading common stocks. So that's a little bit of an update in rates. They're not going to change. I guess it's better than if it was to go higher, right? All right, last piece of news. Fed to cut rates twice this year, but one or none still at risk. So let's take a look at the situation regarding the U.S. monetary policy. In a Reuters survey, most forecasters said that the Federal Reserve would cut benchmark interest rates in September this year, and then again right after. Now, at the same time, it also shows that there is a significant risk in choosing to either cut rates only once or not cut rates at all. Economists surveyed by Reuters in the past few months have consistently predicted that the Federal Reserve will cut interest rates twice. Until last week, the market was predicting a rate cut by Fed once in November, but then it switched predicting 2 rate cuts. So now they think maybe September, November, right? However, over the past few months, Federal Reserve officials have clearly stated they are not in a rush to cut policy rates. Some economists believe that the latest quarterly dot plot forecast to be released by the Federal Reserve this month will show that the number of rate cuts this year will not exceed 2, which is lower than the very close 3 cuts forecasted in March. So back in March, we thought maybe we were going to do 3. 1 in July, 1 in September, maybe 1 near the end of the year, November. Clearly, 3 is out of the picture, maybe 2. However, in a Reuters survey from May 31st to June 5th, nearly 2/3 of economists, so 74 out of the 116, predicted that the federal funds rate would be cut to a range of 5 to 5.25% for the first time in September. Now, this is in line with the conclusion drawn from the survey last month, with a fairly high proportion as well. Only 5 respondents expect a rate cut in July, lower than the 11 in the May survey. And no one predicts that the Fed will cut rates at the policy meeting on June 11 to 12. The inflation rate, especially the 2% personal consumption expenditures, or PCE price index, set by the Federal Reserve remains high. So coupled with extremely low unemployment rates, the likelihood of the Federal Reserve cutting rates prematurely is pretty low. According to the median forecast in the survey, inflation indicators, the CPI, core CPI, PCE, and core PCE are not expected to reach 2% at least until 2026. So as of now, the expectations for rate cuts by the Federal Reserve within the year also very uncertain. Whether it's in the US or India, there are no signs of easing in monetary tightening policies, meaning that the anticipated benefits are yet to be realized, which is one of the key reasons suppressing our market. So we keep talking about these interest rates, right? It's expected to be in September now. A lot of people that guessed it in July are kind of going back saying it's not likely. Rate cuts is always going to eventually happen. It's going to be a bonus. As long as it doesn't get higher, we are in pretty decent shape. Okay, so time to go over the market recap. So our 2 domestic stock market indices of India are Nifty 50 as well as our Sensex. Now, the benchmark stock indices in India have been rising for the second consecutive day, seemingly shaking off concerns about political stability. The benchmark Nifty 50 index rose by over 1% during the Thursday trading session, which was today, while it had risen by over 3% yesterday. Now, regarding industries, except for the pharmaceutical and the fast-moving consumer goods sector, all the other indices are showing an upward trend, especially banking, IT, and real estate, which all rose between 3 to 5%. Now, consumer goods is tough when the heat is high, right? The mid-cap index of the Bombay Stock Exchange rose by 2%, and the small-cap index rose by 3%. However, there's still uncertainties in the market at present. A continued upward trend is unlikely due to both fundamental and technical reasons. The market is likely to experience volatility ahead, with ordinary stock trading not being profitable for now. High short-term expectations may not be realistic, so I would say give it some time to mature, So let's jump into our indexes. All right, so first taking a look at our Nifty 50. Now, today the overall Indian stock market mainly traded in a range, with the index candlestick chart closing as a doji star. Typically, such a candlestick chart reflects the hesitation and uncertainty of market participants. This indicates that the forces of both bulls and bears are temporarily in balance, and the market may be waiting for some factors to clarify before deciding on the next direction. Of course, this also aligns with the overall market situation. After sharp declines and spikes, both the bulls and the bears need some time to consolidate, which is one of the main reasons why I mentioned that the market will likely operate in a range-bound manner in the near future. Now, from technical perspective, the 22,800 to 22,900 range is expected to be short-term resistance area. So back to that resistance area that we broke through previously, right? Making it difficult to break through effectively. Additionally, one thing to note is that even though there are 2 consecutive trading rebounds, we can observe that the trading volume over these 2 days have gradually decreased, indicating that that is not a strong bullish action, but more likely a self-rescue by the bulls or short covering. So therefore, the sustainability of this rebound may not be very strong. So it's best not to have too high of an expectation. In the short term, studying the market direction is going to be meaningless, especially towards the end of the elections where the index price fluctuates widely. Whether you are bearish or bullish, there may not be enough strength at the moment to break out of the price range of June 3rd and the June 4th. So regarding strategies, it is not advisable to engage in regular stock trading for just the time being. The market still needs to be observed. So wait, we need more information. We need more data. All right, so let's jump into the Sensex, which also closed with a doji candlestick pattern. Now, the index plummeted significantly below the uptrend channel on the 4th day, but after a 2-day rebound, the price returned back within the uptrend channel. Now, generally, with such a significant downward breakout like the 4th day, theoretically, it is more likely to be a significant breach. However, in the face of major events, just like the elections, any technical analysis appears feeble and it's not going to be that effective. Which is why I just told everyone not to judge the short-term direction for now. Whether it's going to be the Nifty 50 index or the Sensex index, we anticipate that after experiencing such a significant rebound and drop, it will enter a period of consolidation. Now consider that it has reached a crucial resistance level. There is a high possibility of range-bound volatility. The India VIX dropped by 11% today, closing at 11.6. We expect it to further decrease as uncertainty slowly diminishes. Now, although the election results are now certain and our political stability in the short term, the political developments will continue to exert pressure on the market. Market concerns revolve around the potential for the BJP's reliance on allies to stall economic reforms, thus affecting growth and consequently impacting long-term corporate earnings. Uncertainties in the market still persist, and managing risk remains the primary element in current trading. I have emphasized this point many times, so all members, you must remember this very, very crucial point. Manage risks. All right, the comprehensive analysis of our Nifty 50 and the Sensex Index has concluded. This is what I wanted to share with everybody. Basically, I'm telling you guys to be patient. Wait a little bit. Let's see what the market does, right? I hope it's been helpful. So we're going to be jumping into our next part, the asset management scale competition. A little bit of an update for all of us, right? So currently we are in second phase of competing for the location for the Asia Pacific headquarters, which is in regards to competing in asset management scale. Now, this I've said previously, has been increasingly more important as we are trying to secure the top position. So only if we secure top place in the second round as well, would we secure the location for our headquarters here in India. As I mentioned before, I am working tirelessly on new projects. Our Indian team and I have always been confident about this. You know, we're making important preparations for upcoming breakthroughs. As I've said, you've noticed that we've been launching very high profit trading projects, IPO launches, block deals. So we are on a fast track for getting profits, mainly to win this competition. Now, at the same time, more and more people are starting to support us, and the profits are growing at a much more rapid pace. Now, this includes projects that I've been discussing externally recently as well. All these efforts are aimed at helping members here to profit quickly, allowing the total assets in our accounts to rise even faster. Now, this is going to contribute to the scale of the asset management in our Indian region. I am very personally excited, and the possibility of India and our Indian team winning the selection of this headquarters. This is not only glory for me and the team, but it's also important because once the Asia Pacific headquarters is established in India, the company headquarters will provide certain policies and support to the Asia Pacific headquarters. Now, at that time, we will be able to provide more professional services for the vast investors in the Indian region, as well as more profitable projects and long-term personal asset management plans conducive to our investors. So the most important thing to do is what needs to be done currently is that we need to make profit. Everyone should cherish every profit opportunity and strive quickly to grow their funds in their asset management account. Because there's going to be more important arrangements in the future. All right. Now, up until now, through the transactions carried out in the asset account, we have achieved rather very stable profits. Now, currently, we mainly engage in trading stocks that are hitting the UC limit. We're doing IPO subscriptions. We're doing block deals and so forth. Now, as you can see from the very beginning, when shares were scarce, it is not so scarce now. So everything is done step by step, slowly. Our team has been working for our members and the people that are here to accumulate profits more rapidly and repeatedly. Now, of course, old members may earn a little bit more and new members may earn a little bit less. Now, this is not about anything, not discrimination or nothing, but is just the old members may invest more funds while new members may invest a little bit less. Now, this is the overall situation. It's not individual cases, because with larger investments, one certainly can earn more, and that's for sure. So it just depends on how much money you're starting your accounts with. The people that's been with us a little bit longer have gained a little bit more profits, right? Now, old members also trade more frequently. Since the launch of our wealth growth plan, old members have been more actively involved. Now, even if the profit earned each time is the same, the more trades one makes, the more one will earn. So this is very simple, basic math. Everyone knows that we have a 5x profit plan coming up next. So how do we achieve such profits? Should we rely on the above methods? Obviously, this is not enough. So doing things requires a step-by-step approach. As for projects with higher profit potential, we're currently actively preparing for these as well. Everyone knows I'm a very practical person, so I'm not going to introduce or explain too much before it's officially launched. Now, saying this today is just to let everyone know a little bit more, right? For people that want to participate, you must prepare in advance. Don't wait until the actions formally begin and then you find yourself unprepared, missing out on opportunities, right? Now, of course, the 5x profit plan has its thresholds, as I've mentioned before. So after everything's been said, it's just an update. It's empty talk, right? Our profit is real. Like, profit is the only thing that's real and it's substantial. So let's take a look at the profits, right? Since the commencement of our wealth growth plan up until today, the combined profit rate of all our transactions has reached an impressive number of 183%. We have not even included profit from yesterday's block trading. If we include that, the total would be a little bit over 200%. Am I right? So of all the members here, you should all be satisfied with this profit rate. We're at 200%. Now, of course, it's possible that some people have already far exceeded this as well in terms of profit, while some people might quite not reach there yet. For that reason, in my personal opinion, market reasons are minor compared to individual reasons, such as issues with execution, regarding confidentiality in initial stages, so forth, right? Now, regardless of the reasons, we don't need to talk too much about them. What's important is what we're going to do next. So please rest assured, whether you're earning more or less, even if you're earning less at the moment, it doesn't really matter. After all, our wealth growth plan is not yet over, and there's still many high profit opportunities waiting for us. As long as everyone strictly follows the trading instruction, I can guarantee that everyone will definitely make enough profit. Now, I can say this here and even now, if you feel that you're not earning enough, you have to contact one of the assistants and we will provide you with a solution. In my opinion, if you already reached the current profit rate, it's actually not even that much. Can such a small profit really satisfy us? Can it really retire us? So can this really help us achieve our goals? It can't lead us to financial freedom. Not yet, but it's possible if we continue to grow. So what are we going to be doing? So don't miss out on any upcoming trades. Let's take block trading as an example. Some people don't think that a 7% profit rate in the first tier is small. Now remember, as long as you're within our wealth growth plan, there are always going to be block deals available. You will accumulate profit continuously, and then with a slight increase in your fund, you can reach a 13% trading level. So don't underestimate these small percentage gains. Perhaps if you need to earn a little bit more profit, you need to add a little bit more funds. So, sometimes like 7% of 100 is definitely a lot less than 7% of 1,000, right? So not going to talk too much more about this. I just wanted to give everybody a review, how much money you want to earn and how to earn it everybody has their own separate standards. So, you just follow your own arrangements, right? All right. So last class, we introduced this investment guru, Jim Rogers, to everyone. So before that end of that class, we talked very briefly about 7 major investment secrets of his. So tonight, we're going to study these. Now, these 7 major investment principles are just insights that Rogers continuously profited from over the years. For us, each one is worth studying a little bit closer. Now, of course, in the process of learning from such a master, we have indeed learned a lot. Now, every principle that we're going to learn from these guys going to be suitable for us? It might not necessarily be that case. Now, you ask me why? Because everyone has different knowledge, have different experiences, life experiences, work experiences, relationship experiences. We all have different personalities and so forth. Everything is different about every individual. So we can only go through extensive learning, and then we choose what suits ourselves, and then we just follow that. So furthermore, you may also notice that not only in the process of stock trading, but also in real social life, successful people sometimes have certain similarities in their traits, which is a commonality. This is one of the important reasons that we must persist in learning. Okay, so let's jump in to his secrets. Okay, so first secret, right? We're going to call it diligence. Now, some people may find it a bit strange. Why isn't it a specific trading method? Now, diligence is something everyone can do. So isn't that kind of special? We all can do our due diligence, right? It's actually not that easy. In our studies and our lives, diligence is a very important quality. Now, whether it's pursuing knowledge or achieving personal goals, diligence is the key to our success. Now, Jim Rogers once said, "I don't think I'm smart, but I do work very, very, very diligently." If you work very hard and you love your work, success is possible. Now, on this point, Soros also confirms in an interview with journalists. Soros says Roger is an outstanding analyst and he is especially diligent, doing the work of 6 people alone. Six people. Can you see that work effort? No one can succeed just very casually. So don't say diligence is not special. That's because you are not diligent enough. Can we all do the work of 6 people? Probably not. But that is one of the hard work secrets of life. It's no secret sauce, you know? Diligence also means not being afraid of difficulties and setbacks. So in the investment process, we will encounter failures. We're going to encounter challenges, but these are valuable experiences. Only through continuous summary and reflection can we constantly improve and move towards success. So I hope everyone can maintain a diligent attitude in the study of the stock market and continuously strive for progress. So that is the first secret, diligence. Okay, secret number 2, thinking independently. Now, Rogers always says, I always find myself buried in books being very useful. So I find that if I act according to my own understanding, it is easy and profitable rather than having someone tell me what to do. Now, this is very, very famous saying of Rogers, right? Rogers never valued Wall Street securities analysts. He believed that these people follow the crowd. And in fact, no one can get rich by following the crowd. And I can guarantee you the market is always wrong. You must think independently and you must abandon herd mentality. In a rapidly changing world, the amount of information is so huge and viewpoints are diverse and complex. To make wise decisions in this environment, independent thinking appears particularly important. Independent thinking is not just an ability in learning and life, but also an attitude and spirit. So how do we cultivate this independent thinking? So number 1, looking at issues from multiple perspectives. Cultivate the habit of looking at problems from different angles, not being influenced by a single point of view. Reading and researching different materials and listening to different opinions help us fully understand the issue. So this is very important. Sometimes when we are thinking and like we're so stuck on one point, it's hard to see the truths. Sometimes I always say, and I emphasize this a lot, don't be so stuck to one view. It doesn't matter. Sometimes you can have all the indicators say a specific thing and then the market does something completely different, right? And that's the beauty of the stock market. There's no for certains, right? Number 2, questioning and reflection. So do not blindly accept information. Dare to question. Dare to reflect. So in the face of complex information and viewpoints, maintain critical thinking. Independently analyze and judge. So this is very important. When you accept information, when you're learning something new, don't be afraid to ask questions. If you're not asking questions, that means you're not truly understanding everything that is being thrown at you. There is no shame in asking questions. So that's why I always tell my students, ask me questions. If you have questions, just ask. Don't be ashamed. Ask. Number 3, we got to continuously learn and accumulate. Okay? Independent thinking requires a solid knowledge foundation. So by continuing learning and accumulating, you enrich your knowledge base and improve analytical judgmental abilities. So learning. I always say if you think you are the best at something, it's at that point, that's when everybody surpasses you, right? You always have to keep an open mind. You always have to listen to new theories, new ideas. It doesn't matter from who, from professors, from students, from neighbors. It's always good to just hear everything out and absorb the information, and then you make a judgment later on. We always got to keep ourselves educated. We always got to continue learning. Always read the news, see what you can find. These are very, very important things. Number 4, record and summarize. Now, record your thinking process and conclusions. Regularly summarize and reflect. Through continuous recordings and summarizing, we can better understand our thinking patterns and gradually improve the ability to think independently. Now, this is one of the biggest things that a lot of people miss. When you have a theory or when you have a thought process, try writing it down. Because if you ever look back at it, maybe 3 months from now, 6 months from now, a year from now, you're going to realize that your changing now has shifted from before. And why is that? Is that a good shift or is that a bad shift, right? Are you getting influence in a better direction or are you getting influence in a worse direction? Write these things down so you have an idea what you thought X time ago, and then you revisit it when you have more knowledge. This is really going to change your life. So independent thinking is a valuable skill that not only helps us succeed in learning and work, but also enable us to walk more firmly and confidently on the path of life. So I hope that during the learning process at the stock schools, everyone can cultivate and strengthen their ability to think independently, becoming true wise investors. Okay? All right, secret number 3. So he says, don't go to business school. Now, regarding this rule, it doesn't actually mean much to us. Now, I'm not saying that the business schools are bad, but all of our members sitting here have probably already missed that age to go to school. Now, there is no doubt that business school education is a very high value. This cannot be denied. But let's see what Roger says. So he says, study history and philosophy is better than going to business school. Work as a waiter, travel to the Far East. When teaching at the Columbia Business School, Rogers always told his students that they shouldn't come to study economics because it's a waste of time. Taking the opportunity cost into account, it costs about $100,000 during the study period. Instead of using this money for education, invest it in business, in the stock market, whatever it may be. Even though you might make or lose it all, it's better than sitting in a classroom listening to a veteran professor who had never done business talk big about what you should learn. Now, that's a very important point too. Now, some professors, not all, have never done business. It's like learning how to cook versus cooking yourself, right? Like watching somebody cook on YouTube with like a recipe versus trying it yourself. Completely different, right? Now, in fact, success does not completely depend on professional knowledge. It's more about a mindset and behavioral capabilities. Philosophy makes people smart, while history makes them wiser. Although business school education has its unique value and advantages, it is not the only path in success, especially in a stock trading market. Everyone has their own opinion on this, so that is his views on school. Now, sometimes business takes a keen eye to see what market you're in, how your customers are reacting, locations, also specification. There's so many variables that you cannot teach one system that works everywhere and for everyone, right? So that is why with any sort of business, it's through trial and error, failures, challenges, what works, what doesn't work, and then you will succeed. Okay, on to the fourth secret. Don't lose money. Okay? So Roger said, if you make a profit of 50% through investments within 2 years, but lose 50% in the third year, then you might as well invest in the government bond market. You should patiently wait for the right opportunity to make a profit when you can earn money, and then wait for the next opportunity. In this way, you can outperform others. So this is very true, right? If you, in 3 years' time, if you break even, you might as well have invested in something that was slow and gradual. So my advice is never lose money. Do what you are familiar with and invest only when you find a great opportunity. In the world of investing, never losing money sounds like an ideal goal, and it may be even a model for some investors. However, the reality is it's much more complicated. So, in my personal understanding, sometimes despite our preparation and efforts, investment failures are still an inevitable reality. We need to accept the failure, we need to learn from it, and we need to constantly improve our investment strategy. Every failure is an opportunity for learning and growth. Now, never losing money is a goal worth pursuing, but we must approach it realistically. Understanding risks, devising strategies, continuous learning, maintaining rationality, having a long-term perspective, and dealing with failure are all key to achieving this goal. I hope that in investment process, we not only pursue profits, but only focus on improving our abilities and qualities so that we can stand undefeated in a market where risks and opportunities coexist. Now, not losing money and minimizing your loss is basically the same thing. That is why we talk about risk control. That is why we talk about stop losses, right? There's gonna be times where we lose money in stocks. That is gonna happen for sure. So the best thing to do is we cut those losses at its minimal, and when it's time for us to earn money, we maximize those opportunities, right? Secret number 5, value investing. Now, if you buy into commodities based on their actual value, even if the timing is not right, you're unlikely to suffer significant losses. Now, this is what I have talked about with everyone before. I emphasize trend over the price. Now, it is more important to get the trend right than the entry price. So, in fact, what Rogers is referring to as value investing here means that you must find good companies to invest in. When you trade a stock of a good company, even if the timing of entry is not ideal and the cost is a little bit high, it's not crucial because the stock price of a good company is always going to go up. Compared to the huge profits gained by the following trend, the difference in your cost price when you buy in is going to be insignificant. So value investing is not just an investment method, but an investment philosophy and its mindset. It teaches us how to analyze rationally, thinking independently, focus on the long term, and then we stick to its principles. So, pretty straightforward. You don't always have to buy the stock at its lowest price and sell it at the highest price for maximum gain, right? If we have very strong stocks that looks like long-term bulls and we know it's going to go up, then the sooner we get in, the better, even if it's a little bit high. So we don't know that's going to be the ceiling. Maybe that's going to be the beginning of a very large ceiling, right? So do your research on the companies you want to invest in. If you truly believe they're going to be strong companies, you can invest in them. We don't have to worry too much about entry. Okay, secret number 6. Wait for the catalyst to appear. So wait for the catalyst to appear. Market trends often exhibit long periods of low spirits and stagnation. Now, to avoid getting caught in a stagnant market, you should wait for catalysts that can change the market trend to emerge. Now, this emphasizes the importance of waiting. You gotta be patient, right? Many principles of the masters have similarities. Earlier, we learned from Livermore. I don't know if everyone here remembers his view, but it's enough to predict the market psychology, but never act recklessly. Wait until you have confirmation from the market that your judgment is correct, and only then can you use your money to trade. Sounds very familiar. So what are the strategies for waiting for these opportunities, these catalysts, right? So number 1, patience. This is what you will need until the end of your lifetime. So Rogers emphasizes that investors need to have enough patience to wait for the emergence of catalysts. Do not give up your carefully considered investment decision just because you don't see price changes in the short term. Number 2, maintain flexibility. In the process of waiting for catalysts, maintain flexibility and an open mindset. If there are significant changes in the market environment, adjust your investment strategy in a timely manner. And then thirdly, risk management. While waiting for these opportunities, it's important to manage risks. Properly allocate assets, avoid concentrating all your funds on a single investment target to reduce your risk. So pretty straightforward. We got to be patient, we got to be flexible, and we got to manage our risks. Secret number 7. Silence like a virgin. Now, one of the rules of investment is to stand by and do nothing unless something significant happens. So pay attention. Most investors always like to come and go, find things to do. They might say, oh, look how clever I am. I made 3 times as much and such and such. Then they go and do something else. They just can't sit back and wait for things to evolve naturally. So Rogers is very dismissive of the idea of trying things for luck. Now, I once talked to everyone about a principle of focus. When you focus on something, you will naturally be very quiet. You will put all your energy into it. Because other than what you're focusing on, you don't really care about other information. So focus makes it easier for people to succeed. This principle can not only be applied to our stock trading process, but also worth learning and applying it in social life. Now, of course, I also hope that everyone can apply the rule of silence in the investment process, constantly improve their investment level and achieve better investment results. Okay, so this is gonna wrap up our 7 secrets. So let's do a quick summary of what these secrets are trying to tell us, and we compress it into one very short form. So number 1, we must all do our own due diligence. So we gotta work hard. We have to be careful. We gotta be perfect with whatever we do. Number 2, we must learn to think independently. That also means self-learning. Continue to learn. Stop following the crowd. Number 3, knowledge is power. Real-life experience is also a great way to gain more and faster knowledge. Education is great, but not everybody can afford it, right? Number 4, minimize your losses. Maximize your gains. This is very important. Number 5, find value stocks and don't worry about entry points. Look at the company's history, their stats, their assets. How are they doing? Right? Number 6, wait for catalysts that can change the market trend to emerge. Patience is going to be key. You got to be flexible, and you also got to manage risks. And lastly, focus on the strategy and task at hand. You don't need to do too much all the time. If you're focused, you're going to be prepared. So just focus on that. Now, these things are not hard to understand, nor are they hard to follow. It takes discipline and it takes a mindset to get into rhythm. All right, so that is going to wrap up for today's online course. Lots of things to absorb. Please go over all the contents again. Jim Rogers is living a very phenomenal life. He loves to travel. He loves to make money. We all do as well. Why not learn from him? Why not study some more of these things in depth, right? Our next online class is going to be scheduled for Tuesday, June 11th at 7:30 p.m. I hope to see everyone here again. Thank you very much to my friends for your strong support. And I'll see you all next time.